What are you looking at lately in the markets and as that relates to Bitcoin and crypto?
Yeah, so I mean, the markets are still kind of watching every headline coming out from Russia and Ukraine, right? Friday we saw that gap up initially, or I think it was Friday, and the markets had gapped up after supposedly Putin had said something positive about maybe negotiations. And then I think it was very interesting to see how the market, after just a little bit, I mean, very limited upside, it opened up and then right away started to sell as people said, listen, this guy isn't some guy that you can trust in what he says, and there's no troop movements to signal any pullback. They're still bombing, the crazy amounts there in Ukraine. So the market really sold very sharply, closed at the lows of the day, which is not unusual for a Friday when the markets are closed for 2 straight days. So people don't want to be buying into Friday when you have a war that could, God forbid, could escalate and draw in more countries or NATO. I mean, there's just so many risks right now that it makes it very tough to be someone who's just accumulating.
Yeah, investors love clarity, and
Yep.
it's the markets are very knee jerky to any kind of news, and that's more typical of a bear market behavior, reacting to any kind of news, because it's not just what's going on in Ukraine. It's any news that comes out. The markets are very knee jerky to it. You don't see that so much in the bull markets.
Yeah, you're right. In fact, I vividly remember how many, in the last prior to this year, 2022, but, going back to late 2020 and 2021, there would be news that would hit that you'd be like, that's not good news. And then the markets would sell for like an hour and then boom, off to the races they would go. And you're right, way different market environment. The psychology of the market is 100% different.
Yeah, and technically, it's only the Nasdaq that's in bear market territory,
Yeah.
where still correction territory for the S&P and the Dow.
Yeah, and I think it makes sense. Considering that if you look at the percentages, the Nasdaq was the one that had the biggest gains during COVID, especially. So it makes sense that one would be falling the hardest. There are stocks getting. I've been accumulating. Last week I really did take some initiative and start accumulating plays. Zoom. Some of these charts are just getting to the level. And listen, in bear markets, notoriously things go lower than you would think. But when you look at a chart like Zoom, and I'll throw it up here on for everyone to see, you're now getting to points where you can kind of make a case that it is at a valuation level. So for me, like, I love looking back on charts and seeing that price is trading into where it was at a prior point before all this publicity, right? So during COVID, Zoom became a household name, and you're now trading at levels that were prior. So here's your March, here's 2020, right? Right there. That's when COVID hit. And this is when it obviously took off. You're now trading back to levels where it wasn't a household name, yet it is still a household name. So, granted, could you overshoot this level? Yeah, of course. But ultimately, I think at these levels, it starts to make sense to nibble on some technical trading levels here on good quality names. I wouldn't go to kind of the small cap route where they still don't have the earnings behind it. But Zoom, I think, is trading around a 20, 22 PE, which again is not horrendous now. When it was at 100, that was ridiculous. But at 20 to 22, you can kind of make sense of that.
Yeah, yeah. It seems like the deleveraging has somewhat take place. Now we're in the repricing, back to normal PEs, given standard interest rate environment. What a lot of people are forgetting is that where we came from was a zero, negative risk or zero risk, interest rate environment, no downside really. And I saw your tweet, and so I'd been watching it, and I, like you said, to your point, I don't want to go into the weekend sitting on anything, because you just don't know what's going to happen, over the weekend, and you can't unwind that position. So,
Right.
I'm going to wait till Monday and see how that one shakes out. Now, what about Amazon? What are your thoughts on Amazon with the stock split and all that?
Yeah, so notoriously stock splits, right? I want everyone to really fully understand that nothing changes for the company, just the share price and then the amount of shares outstanding change. But, it is a way to kind of artificially keep your price up. And it does give buyers of options. It makes options a little bit cheaper. So, you don't have to, you remember, you can't buy partial options. You can buy partial shares, but I don't believe you can buy partial options. So for a lot of investors that like to play options, they're just not able to play Amazon prior to the split. So I understand it getting a little bit of the upside. To me, I look at the chart and it still hasn't corrected enough to make me feel comfortable. You can see that you're now trading kind of in this range where if you connect these lows, you're just kind of dangling right around this breakdown point. And that's what you don't want to see. You don't want to see this really break lower. If it does break lower, I think you're probably headed down towards the 2000 level on the chart. But yeah, interesting news. I mean, we've seen Google announce it. Apple did one not too long ago. Obviously, Tesla was a big one. But remember, Tesla did it during a bull market. So it just got amazing price action. You're now in a different environment where I wouldn't expect the bullishness to last quite as long.
Yeah, yeah. There was a little pop on the news, but I think
Mhm.
historically, when you look at stock splits, they don't necessarily exponentially increase price of the stock. It just, makes them more accessible for people.
Yeah, and I think again, it's a lot of companies will use it to kind of generate that pop in the stock that they want to get. So I think there's the new CEO at Amazon. He probably wants to keep the stock somewhat up while he's trying to make new initiatives and do things like that. So a perfect example. And again, I understand it. Maybe Amazon is saying, hey, listen, could we get in the Dow Jones Industrial Average, right? I mean, Amazon is the biggest retailer in the U.S. So there's no way they would ever put Amazon in at $3,000 a share into the Dow, because it would literally dwarf every other company in the Dow, right? And that's what Apple did, right? Apple did the split and then they were able to get in. So maybe that's the angle here too, is maybe they're thinking, all right, well, we should be in the Dow, we should be in that index, and this is one way to kind of open the door, if you will.
Yeah, yeah. I think that's kind of the narrative out there, is that's going to be the next step. And then you're going to have a couple of companies really, I mean, right now, Apple's pretty much holding the Dow up. I think Apple has a very similar chart to Amazon right now, doesn't it?
It does. It absolutely does. And again, you're right on this major trend line. Let me show you this, because this is really, I mean, this trend line we hit just maybe 2 weeks ago right here, and you had the big reversal. This was when the invasion first took place. Now you're back into that line again. And you have to say that the more times you hit a level, the more likely you break. And again, I love the analogy of, like, if you're on one side of the door and it's locked, and you need to save someone on the other side, you may run against that door as hard as you can. Probably the first, second time, maybe it doesn't break down. If you keep hitting that door with all your might, eventually it breaks down, right? It's just a matter of how many times. So essentially, this trend line is a door, and you've now hit it very many times, and most recently just about 2 weeks ago. So there is real risk that Apple could now be the next one to see a big decline. And hedge fund managers and institutions are so overexposed to Apple, because it's been a darling for so long, that really that could be a major collapse play where you could see it take down the markets overall, especially with the size of that company.